Alright, so welcome back to my channel. My name's Take Note. In this video, I will be analysing the US30 chart. Stick around to the end of the video so you can get a good understanding of what I expect to happen next week going into the month of June. What I'm going to do first and foremost is wipe the chart clean so you guys can get a solid breakdown of my understanding of my belief of what I think is going to happen over the next week, 2 weeks in the charts. First things first, I just want to point out that I am a funded trader. Currently funded 100k with funded next. I have my payout eligible on the 10th of June. I'm currently up 2%. And if we take a look at some of the payouts I've received on this account, I've been paid out over, if my maths is right, roughly about $13,000. Based on my investment, I've only spent about $439. I've actually had a full refund, so I haven't actually spent any money on this account, and I've returned over $14,000, which isn't too bad. Nevertheless, let's get back into the charts so we can take a look at what's going to happen over the next couple of weeks. First things first is we had price, crash down over Liberation Day in April. First week of April, we had a crash, which I called. And I've actually got that documented on this channel. So if you look at the video labeled, I think is an imminent stock market crash. I think on the 30th or 31st of March, I actually released a video talking about a pending stock market crash. So definitely take a look at that video to see some receipts. Nevertheless, we had a liquidity sweep over the last couple of weeks. We had a sweep of liquidity at this level here. There was actually a build-up of liquidity, so we call this a liquidity pool when there's liquidity resting at this level and this level. That liquidity was nicely swept. We then had price break below this level. We broke below this level here and we closed where we saw price close underneath this level. We assumed that there would be a continuation of the downtrend. However, on Friday we had a red candle. On Monday we had a green candle. The markets were closed, but this green candle gave us an indication that we potentially see price rally higher. When we have price present an upward move, what we tend to do is we draw out our fair value gaps, and this is the area that we expect price to go to. So if you position long in this area here, and I'll show you how I positioned for this trade. I think it was on Tuesday, maybe on Wednesday. The way we position to our trades is we look for a sweep of the Asian session low, and we look to get long after price pulls back into this level and has taken out all the weak-handed buyers. So if you was able to get into the trade on Tuesday or Wednesday, this would have been the position that you would have taken after a sweep. You get in, you position long, you have a wide enough stop loss, and you hold the market to the target of the fair value gap high. That would have been our potential entry. If you missed on that entry, you would have been able to get into another position. I believe on Thursday we had a massive rally during the Asian session after rumors of Trump's tariffs being cancelled. If you held that area, you place your Asian session low liquidity at that low, you would have had a second opportunity to get into this trade. After seeing price come down and sweep this level, you would have had an opportunity to buy at this level again. The best place to position would have been as close to once you swept it, as close to the low as possible, which would have been around here. I think I got positioned around here somewhere. Nevertheless, that would have been your second opportunity to try and buy the market back up. And then if you missed this entry as well, you would have also had another opportunity to buy the market again today, which I participated in. We had the Asian session low right here. After price came down and swept it, if you position long right here, you would have had your opportunity to buy the market back up again, and hopefully at least target a minimum of 1-to-1, which I believe I grabbed today as well. So if we take a look at the account, I was able to grab that 1-to-1 trade today, which was nice. What happened today was very, very interesting. So after we have a sweep of liquidity at the high of this level right here, we're expecting price to go down, because once liquidity is swept, we expect to see price go down in an aggressive fashion. That being said, because we had this market structure shift at this level, that sort of ruined the buyers for price going down. Hence why we started taking long trades, because we're currently in order flow which is in the direction of an upward move. So that being said, where was I expecting price to go today? I was expecting price to go and target the highs. However, we failed to do that. So if I go on down to a lower time frame, we'll take a look at the 4-hour chart. And if you see what happened today, we can see that price failed to get above this level multiple times. Multiple times we aimed to try and get higher. Each time we got to that level, we failed. After the sweep right here on my entry, after this sweep down here, we got up to here, we bounced, we came back down, bounced off the sweep level once again. We rallied higher, bounced, came back down, rallied back up, failed again here, and this is where I exited the position. Now, this is extremely interesting because we had a sweep of liquidity at the highs and we're positioned inside a fair value gap. If we get a downward move like this on Monday and we get a close below here, we could potentially see price go down aggressively and begin a decline to target lower levels of liquidity. And I'll show you the levels of liquidity we've got on the chart. The first level of liquidity we've got is right here. And the reason this is a level of liquidity is because if we take a deeper look, we can see that when price came down to this low, we failed to breach this low. This low was felt to be breached at this moment. So this tells us we're pooling liquidity here. So what we should expect is price to go down much more aggressively in an attempt to target this level of liquidity. So this is our first level of liquidity. The first thing we need to see is price to close red. Close red and below this level. That will confirm a market structure shift. Why? Because we've got green and red candle prints. We've gone up and down in this range. And now if we can confirm the downtrend, we should see price pull back and target our level of liquidity. So that is why on Monday, I will be looking to see whether or not we get a red candle close, and then we could start targeting this level. However, we do have quite a few levels of liquidity to target. We've also got liquidity resting right here. All the buyers who are positioned, who've got positioned here, would have placed their stop losses right at this level. So this is another level of liquidity that we have to target. So when I'm looking to get positioned, I'll be targeting this level here. I'll also be targeting this level here as well. So these are two levels of liquidity that I'm looking to get targeted when I'm looking for short trades. After we target these levels of liquidity, there is still a potential chance we come back down to retest and sweep this level as well as the liquidity resting at the lows. And we can see that obviously this one failed to target this level as well. So we have quite a few levels of liquidity to target on the downside. We could potentially see a stock market crash over the month, throughout the month of June, which I spoke about in the previous video. But this stock market crash, or this decline I expect to happen, would be a perfect opportunity to begin to, would be a perfect opportunity to begin to position long into the market. And if price does come back down here and sweeps the lows, I will be looking to get an aggressive long trade into the market in an attempt to target the all-time highs once again. So this is the sort of trade I'm looking for over the next month. But in the near term, over the next week or so, I will be looking for price to, break below our level and confirm a market structure shift so we can see price continue in a downward trajectory to target our levels of liquidity. But if we take a look at the month, the weekly chart, it's going to look really rough if we have, quite a few red candles printed downwards on the weekly chart. All that will tell me is we're most likely going to target levels of liquidity at lower levels. So, and that could last a few weeks or even maybe a whole month. But it's been amazing to trade the markets over the last few months because we've seen quite a lot of volatility. And I've already mentioned that I was able to predict this quite precisely in regards to the accuracy of my call. It was quite precise that I called the market will come all the way down to here, bounce off here, and then we begin to see the market rally back higher. So it's nice to trade the markets when you understand what's going on. That being said, I'm going to leave the video here. I hope you found value in the content. Once again, if you like the video, hit the like button, hit the subscribe button, and definitely check out my video on the stock market crash. I named it the imminent stock market crash. Definitely take a look at that video. I'll see you in the next one.